Gentlemen?
Yeah. So, good afternoon, good evening, everyone.
Good evening, sir.
Am I audible properly?
Good evening, sir.
Yeah.
Yes, sir. Yes, sir.
And you can see the screen even.
Yes, sir.
Yeah. Just hold for 1 minute. Okay. So, today we are going to start with capital structure. Okay. So, anyone can tell me what constitute the capital?
Shares, debts,
Equity, debt,
loans taken from the banks,
loan.
financial,
Any
financial instruments.
financial instrument means which means um these are equity, debt, loans. These means see, financial instrument is derivative options. Okay. Or how I can say, when we are doing some investment. Okay, so it is basically we are discussing about the capital. Means which you can use for doing a business or running a business. One more component is missing. Anyone can guess?
Paid-in capital,
Trading capital is again, I mean, more or less, see, in equity, trading capital is again investment.
is it the bonds?
It is a bond, is
No.
basically the debt. In equity, there is a preferential capital and common stock.
Debentures,
Debenture is again the part of debt. One is missing. Retain
physical
earning.
goods,
Retain earning.
working capital.
Working capital, yeah, but this is the short term. Retain earning. So whatever may be the profit accumulated, which we are not distributed as a dividend, that is again we need to consider as a capital. Okay. So these are basically the capital. What we are going to learn here, what is my cost of capital? Okay, that we will see. Okay, why we need to see the cost of capital? my profit should always be more than cost of capital. Then and only then there is a appreciation in a capital. So this topic we are not going to take on immediate basis. First, we understand all this instrument or the component of the capital. Okay, but we are understanding the component of capital just to find out what is my cost of capital. Yeah. Okay. So various form of debt financing which are listed here. Okay, we need to take some practical example as well. Go one by one. These are basically. So first is commercial paper. Okay, so it is issued by corporation. Corporation means like the companies, like say for the company ABC. Okay, they may issued commercial paper for not more than 270 days. 270 days. Okay, so this is, if it is less than 360 days, then we need to consider this as a short-term date. Okay, as the commercial paper we need to issue having a maturity less than 270 days, maturing in 270 days or less. Okay, so that we need to consider as a short term date if it is less than 365 days. Okay, so generally what happened, the debtors instead of paying the amount, okay, they may issue the commercial paper which carries the interest as well. Okay, so and this will become a commercial paper receivable, or sometime we are issuing a commercial paper to our creditors. Okay, so it is basically to finance our current asset or to meet the short term obligation. Means when we are issuing, then we are meet out our short term obligation, and when we are receiving, that is basically, I mean, that commercial paper we can discount with the bank, so we can finance for our current asset. Just keep in mind, the maturity period for the commercial paper should be less than 270 days, and generally it is issued by the company. It is not issued by the bank. Then debentures. So debentures is basically issued by the company with a fixed interest rate. interest rate. Okay, so whoever buying a debenture, they are becoming an investor, and the company is securing a money by issuing a debentures. Okay, so debentures sometime unsecured. Okay, and sometime it is secured. So it depends. Okay, then subordinate debentures. Subordinate debentures. So subordinate debentures is basically means first they are basically the unsecured. Okay, but at the time of liquidation their rank before normal creditors or trade creditors. Okay, so whenever we are liquidating the company, so whatever may be the after liquidating the asset of the company, whatever the amount we have, we are distributing in a sequence which is given in the act. The first we need to make a payment to the government authorities, and then whatever may be the mortgage debt or the secured debt, then we need to make a payment. After that, we need to make a payment to the subordinate debenture holder, and then we can make a payment to the creditors. Okay. So subordinate debenture holders, mostly there means it is also carrying a fixed interest rate. Interest rate, and as these are unsecured, this interest rate is higher than debenture. Higher than secured debenture. So these are all the type of loan. Okay, why subordinate debentures are getting a higher interest rate? Can anyone explain? Any guess? Because they are carrying a additional risk. Because see, as they are the unsecured debenture holders. Okay, so that's why they are carrying an additional risk, and to meet out or to compensate that risk, they are expecting a higher interest rate. Okay, then income bond.
When are these debenture issued, sir?
Sorry.
At what? When are these subordinate debenture issued? I mean, what circumstance they
Okay,
issue?
so see, debentures or subordinate debentures, generally we need to issue for any long-term project. One point also keep in mind, like commercial paper, credit line. Okay, these are basically to meet out short-term obligation. Obligation. Okay, credit line. These are mainly because to meet out the short-term obligation, and then the loan means particularly the term loan or debentures. Okay, or I mean the subordinate debentures. These basically we are issuing to finance the long-term asset. Any loan we took for less than 1 year, that we need to utilize for current asset, financing the current asset, okay. And any loan which we took for more than 1 year, say for 5 years or 10 years, that we need to utilize to finance the long term asset. So whenever you are in an expansion mode and you want to buy some machineries, you want to expand your facilities, so at that time you need to organize your money by issuing a debentures or equity infusion. That you need to keep in mind. Means always short term loan you need to utilize to finance the current asset, and the long term loans or debentures you need to utilize to finance the fixed asset, non current asset. Then income bond.
So both debentures and subordinate debentures are unsecured debt. Then why is it that subordinate debentures have higher interest?
No, no,
Why they have higher
no, no.
risk?
See, if the unsecured debentures, okay, so in that situation, they are also considered as a subordinate debentures. Okay, subordinate debentures is basically how I can say, like means sometime what happened, it is associated with a particular asset, but on those asset, the first priority goes to the debenture holder, okay. And if any surplus available from liquidating those assets, then the priority goes to the subordinate debenture holder.
Sir, is this subordinate debenture holder actually there, sir, in many companies?
Subordinate debenture holder, I mean, again, can you repeat your question?
I mean, whether the subordinate debenture is actually issued. I mean, is it there in the real world?
So subordinate debentures also get issued by the company. Means if I need to recollect the practical situation, just hold for 1 minute. Mm. Means if you see, in India, if you see the Tata Power or L&T, they mostly issued the subordinate debentures for their, particularly see, if I mean the situation is if that like Tata Power, they are okay, they may start a project for one location, any location you can consider, maybe in a like power plant in some state. Okay, so to finance this, they are going to issue the subordinate debenture, and once this project started, whatever the recovery come, then they start to pay their subordinate debenture holders. Okay, so mostly the subordinate debentures we are issuing against the particular project. It is not like this the term loan type. Okay, and these are mostly unsecured. So in India, if you see the Tata Power, L&T, they generally issued the subordinate debentures. Even banks also issuing the subordinate debentures. Then income bond. So in income bond, like the company is paying to the company is paying interest, or the issuer company paying interest only when they earn the money. Okay, income bond generally issued to the promoters only, not the third party. So it is basically the conditional income payment. Okay, there is a, I mean, there is a guarantee for the principal repayment. Condition only the income is conditional. Okay, mostly it is issued to income bond is issued to promoters or any default if there is any default loan or debt, then to restructure. I mean, you took a loan from the bank and then you are not able to pay the EMI. So you may agree with the bank that you are going to issue the income bond where you guarantee the principal repayment. Okay, but the interest you are going to pay only when there is a income. Then junk bond. Okay, so it is junk bond is non-investment bond. Why we call it a non-investment bond? Generally issued by a companies having a credit rating of triple B or even less than that. Lesser. Okay. So there is a means if the credit rating is triple B, that means chances of default is very high. Okay, but it carries very high interest rate. Okay, so that is basically the means very high risk and high return. So generally when bank is not ready to pay, not ready to give the loan, in that situation, the company may issue the junk bond. Okay, and the one best example is basically whenever there is a divestment, divestment or management buyout. So these terminologies, basically management buyout means like the owner want to sell his company to their existing management, means employees buying the company. So in that situation, this employees may gather a money or gather a capital by issuing a junk bond. Means at the time of investment, the investor is aware there is a high chances of default. Okay, so mostly it is issued when there is a company is having a poor credit rating, or there is a situation when there is a management buyout. Okay, so when the employees planning to take over the company, they are going to gather the money by issuing a junk bond. then mortgage bond, yes, someone is trying to ask some question, I think.
Sir, is it purchasing the sinking company from the uh, old company? The junk bond basically purchasing the sinking company by the employees?
Not necessary it is a sinking company. Okay. Sometime what happened, owner want to retire. Okay. So he want to sell it to company to third party. So instead of that, he may offer the company to existing management or the existing employees.
What will happen about the loans which are ongoing, sir? About the company? Will
No,
it transfer to the employees itself?
no, it is not like that because the bank gave a loan to the company on the basis of net worth of the owner. And if the owner want to sell those company to third party or the employees, he need to give the intimation to the bank. Okay, bank always put a condition if there is a change in ownership for more than 20%, then like the company need to inform the bank, and bank may again do all the loan processing. Okay, so it is not like this that it is mandatory or necessary that loan get transfer. Of course, it is a share deal. Mean the ownership get changed with the share deal. Okay, but the whatever may be the existing borrowing. Okay, so that means the condition prescribed by the bank that you need to follow, and accordingly you need to inform the bank, and sometimes bank may impose a condition to repay the loan. Not necessary. Sometimes they may allow to carry the loan, but mostly in case of the management buyout, bank is saying to repay the loan or settle their loan.
Sir, but it's a default company, right?
Not necessary it is default company. Means default company is one example, of course. Okay, means like junk bond mostly issued by a companies who already defaulted. Okay, so chances of default is very high. But junk bond also issued by those people or those company who means the companies are relatively new, and the promoters of those company or the prospective buyer of those company don't have much net worth, and because of that reason chances of default is again high. Means if your project is successful, then you may like make a repayment to the your borrower. But if your project is not successful, then the promoters don't have a sufficient net worth so that they can repay the loan to the borrower. So that's why they need to issue the junk bond. Clear. So it is basically depend on the situation. Okay. Mostly two type of companies like issuing a junk bond when their credit rating is triple B, or already the companies did the default in repayment. And the second is when there is a management buyout. I mean, the promoters don't have a sufficient net worth to repay the loan in case the company fails. Okay, so that's why they issue the junk bond. Then mortgage bond, it is secured against particular property. Mortgage generally, not generally, every time it is secured against fixed property or real property. Real property. Okay, so these are basically the mortgage bond. Then lease. Lease is basically, means whenever you are buying a asset, okay, on lease, okay, where there, means almost lease payment, discounted lease payment covers the 90% of the value of the asset, or 75% of the useful life you are going to use of the asset, or you have a buyback provision, then also it is a source of finance. Means if it is a finance lease, then you can consider this as a source of finance. Okay, so it is again a kind of debt in debt finance. Okay, so whenever there is a contractual agreement, okay, so that you are, I mean, someone is buying an asset and which you are going to lease back it to you, and you are going to use the asset for almost entire span, or you are going to make a like payment in installment, entire payment in installment, or you have a buyback arrangement. Okay, so in that situation, this is also considered as a source of finance. Okay, so these are some debt financing. Then equity financing and the preferred stock. Equity financing is basically common stock, and preferred stock is basically the preference stock. So they are basically the actual owner, and the preferred stock having a characteristics of the debt as well as the equity. Okay, so like we do not require to pay the dividend. Okay, it is not compulsory. Okay, but in if there is a cumulative, then we need to make a provision. Means before issuing dividend to the common stockholder. Okay, in preference stock also cumulative and non-cumulative. Okay, in cumulative, if you want to issue a dividend to the common stock, then you need to first repay all pending dividend to the cumulative shareholder, cumulative preference shareholder. Okay, and here also you need to give the fixed, like 6% fixed dividend. Okay, in common stock you can give the infinite, whatever may depend on the profitability. Okay, so that you can give. So these are basically, I mean, repayment of capital is not required or not mandatory. So whenever you are liquidate the company, at that time you need to repay the equity payment to the equity shareholder or the preferred stockholder. Okay. In India, you can issue the preference share for maximum maturity period. You need to maintain the 20 years. Means within a 20 years, you need to repay the preference. You need to make a repayment to the preference shareholder. Okay, but in US there is no such condition, so it can be a perpetual. Okay, and sometime what happened, whenever I mean, there is a convertible and non-convertible also. Means whenever there is a startup, okay, so the investor investing the money in the form of preference stock, okay, and then they want, if the company goes well, then they put a condition after 5 years, okay, they have an option to convert in equity. So it is an option available to the preference shareholder. So either they can get the repayment, or they can get converted to the common stock. Okay, so that is basically the preference stock. Okay, convertible and non-convertible. In non-convertible, you never become a part of the equity shareholder, but you can claim the your investment. You can claim. So it is the basic, equity is basically the basic common stock is basically they are the basic owner. Okay. Then, like we issue the share at a par value. Par value is basically the printed value on the shares. On shares. Okay. After 2 years, means when it is the first investment, first time investment, or at the time of incorporation, we issued the share at a par value. After 2 years, there is a certain profit accumulation. Okay, say for the share value is $10 and there is a profit accumulation of $2. Okay, so the value of the share is $12. Okay, now after 2 years, if I want to issue the share, then I cannot issue it at $10 because he is going to, whoever maybe become an owner or part of the part owner, then he is also contributing in profitability. So we need to issue the shares after 2 years at $12, but the par value is $10. Okay, so remaining $2 we need to transfer to additional paid-in capital. Okay, this is basically the common stock value. And this is basically the additional paid-in capital. So in a debt, there is a flexibility. There is no flexibility, means you need to pay the timely interest and the repayment. Okay. In equity, you do not require to pay compulsorily dividend or principal payment. Okay, it is required, mandatory, it is not required. Tax deductibility. Okay, tax deductibility, in case of the debt, you can claim the tax benefit. In case of equity, whatever the dividend we are going to pay, you cannot claim tax benefit. Then EPS dilution. EPS, I tell you something. Okay, this means I will take in a short, but we need to study in a detail. Okay, EPS is basically the earning per share. Okay, So whatever may be my net income, that we calculate always after tax. Sorry, first I need to write interest plus tax, but before dividend. Okay. So in case of the debt, okay, there is no dilution, okay, because we need to calculate earning per share. For calculation of the earning per share, we are not considering the interest, okay. But in case of the equity, we need to consider net income minus cumulative preference dividend or preference dividend declared, both or cumulative preference dividend or preference dividend declared, that we need to minus, okay, and then we need to calculate the earning per share. Okay, so that's why there is a further dilution we need to do while calculating the earning per share. Second, if you increase the debt, okay, increase the debt, your interest expenses may increase, okay. But in case of the equity, if you increase the equity, number of shareholders may increase. So my earning per share goes down. Increase. Okay. Earning per share means earning available to common stockholder. Means you are deducting preference dividend as well. Okay. Divided by number of common stockholder. Okay. So if the number of share increases, okay, so denominator get increases, and because of that earning per share goes down further. Okay, it get reduced. Then the increased financial risk, because we need to, in case of the debt, we need to, whether we have a profit or not, we need to make a repayment of committed interest and the committed principal. So that's why financial risk get increased. And in case of the equity, we do not require to pay compulsorily the dividend. So that's why there is no financial risk in increase. Okay. Then security issuance cost, in case of the debt, it is low. Security issuance cost means whatever the cost we need to incur to issue the security. So in case of the debt, it is slightly less than the equity holders. In equity, you need to do a lots of advertisement, and you need to appoint an underwriter who support you to sell the equity. Okay. And the investor return, in case of the debt, it is fixed, and in case of the equity, it is variable. Then weighted average cost of capital. So component of the capital we already saw. Capital. Okay. So say for debt, 15%, retain earning 10%. I am using the retain earning always. Okay. And the equity 75%. Okay. Interest rate of the debt is say for 10%. Okay. And the return on equity, and the equity is always same, it is 20%. Expected expected return of the shareholders. Okay. So if my tax rate is 30%, So effective cost of debt is 7%. Why? Because if I'm paying the interest 10%, I can get the 30% tax benefit. So effectively, my cost of debt is 7%. Okay, and this is non-deduct taxable, so it is 20%, 20%. Okay. So here 15% means if I consider, so 7% of 15% is 1.05. 10% of 20% is 2, and 20% of 75% is basically 15. Okay, so total is basically 17 and 18. So it is 18.05. So it is my, even though I am paying 20% return on investment to the equity shareholder, okay, but because of less return, okay, so my overall cost of capital is less. It is 18.5%. 1.05, 18.05, so almost 18%. Overall cost of capital is 18% because 15% I am using the debt. Okay, so it is basically the average we need to calculate. Are you able to understand this? I mean, in my total capital component, 15% portion is debt, 10% is retained earning, and 75% is equity. So 10% is interest rate, which is effectively a 7%, because what I'm doing, 10% multiplied by 1 minus 30% that I'm considering, because I'm getting a 30% tax benefit. So effectively I'm paying a 7%. Return earning, I need to pay my investor return at the rate of 20%, and the equity holder is again the 20%. Okay, so 7% of 15% is 1.05. 10% of 20% of 10% is 2%, 20% of 75% is 15%, and if I add together, then it is 18.05. So approximately 18% is my average cost of capital, or weighted average cost of capital. Okay, any doubt here? Are you able to understand?
Yes, sir.
If we go with the amount, I'm just, instead of 10%, 15%, I'm just putting a number. The first one is debt, second is retained earning, and the third one is capital bill. Okay, and then I apply again the percentage, 10%, same 20%, and the 20%. Okay, so this will become a 7% because the tax rate is 30%. Okay, 20% as it is non-tax deductible. Okay, so then if I calculate, so total return on investment I need to give to my investor is 3,48,000 against the investment of 20 lakh. So what is my effective cost of capital? 3,48,000 divided by 20 lakh, which is 17.4%. Okay, so this way we need to calculate. Okay, so here they took a preference shareholder also. Okay, so the one more component, debt, retain earning, preference share, equity. Okay, debt is 10%. 10%. Then retain earning is 10%, preference share is 10%, and this is 70%. here it is 10%, so effective is 7%, and retained earning is 20%, preference share is 12%, and here again the 20%. Okay, so effective is preference shareholder also at dividend payable on preference shareholder non-tax deductible, so we need to consider the full and the 20%. So 7% of 10 is 7, 20 or 0.7. It is 20% of 10%, so it is 2. Then it is 1.2 and then again 2. So 4, 4, 5, 7 to the 14. It is 14. Okay, so 0.9, 0.9, and then 4 plus 5 plus 2, 5, 7, and then 1. So it is 17.9, like this. Okay, so cost of capital is 17.9. Okay, so it is just a weighted average we are calculating. Okay, we need to consider this example. Assume that the cost of common stock equity for XYZ company is 8.47%. The cost of preferred stock equity is 6.8%, and the weighted average interest rate is 6%. Also assume that the market value of percentage of 55% of the common stock, then 20% is the preferred stock, and the 25% is the debt. So it is 7500. Okay, so tax rate is 30%. Okay, now 8.4, then 6.8, and the debt is 6. Okay, so it is like again effective is 8.4 as it is, 6.8 as it is. The only thing is that we need to deduct 30% tax rate. So 6 multiplied by 1 minus 30%, which is 4.2%. Okay, and then we need to apply 8.4 multiplied by 55%, 6.8 multiplied by 20%, and 4.2 multiplied by 25%. So effectively it comes 7.03%. Okay, so which is given, means if you calculate here 8.4 multiplied by 55%, 4.62, 6 plus 6.8 multiplied by 20%, second, and plus 4.2 multiplied by 25%. So in total it is 7.03%, the same here. Okay, so individual capital component, so long term element and the short term element. Okay, so long term element includes long term debt, preferred stock, common stock, and retained earning, and short term element includes short term interest bearing debt, other form of current liability, account payable, accrual, are rarely if include the cost of capital estimate, because they generally. So short term element, generally it is notes payable or the short term interest bearing debt. Okay, but generally we are not consider, whenever we are calculating the cost of capital, we are considering the long term element only. Short term element we are not mostly not we are going to consider. Then after tax cash flow. In evaluating the cost of component of capital structure, after tax cash flow are the most relevant, and the cost of debt is computed on after tax basis because the interest expenses is tax deductible. So that we already discussed. Whenever interest rate means the interest on debenture is 10% and tax rate is 7%. Sorry, tax rate is 30%. Okay, so we always need to consider 10 multiplied by 1 minus 30 because this 30% is tax deductible, so it comes to 7%. Okay, so always you need to consider after tax cash flow. Okay, and only interest on debenture is tax deductible, or not interest on debenture, only interest on interest element is tax deductible. Dividend, whether it is on preference share or whether it is on common stock, it is not tax deductible. The same is retained earning. Pre-tax cost of debt. So pre-tax cost of debt represent the cost of before considering the tax shielding effect of the debt, and after tax means if they gave the after tax cost of debt and gave a 30 tax rate, that means then you need to use the after tax cost of debt only. Do not require to apply the tax rate. Say for if in the question it is given pre-tax cost of debt 10% and tax rate is 30%. Okay, so in that situation, you need to calculate 7% as a after tax cost of debt. Okay, why? It is just like a 10 multiplied by 1 minus 30%. Okay, but if it is given and then you can calculate, means once you get the after tax cost of debt, then you need to calculate the cost of debt for weighted average cost of capital. But in the question, if it is given after tax cost of debt 6% and the tax rate is 30%. In that situation, you need to consider 6% for calculation of the cost of debt. Okay, you do not require to apply further 30% because it is already given after tax cost of debt. So in this example, assume that the long-term debt component of the weighted average cost of capital for a firm include pre-tax cost of debt 12.5% and 30% tax rate. So it is pre-tax. So that's why we need to first calculate the after tax. Okay. So 12.5 multiplied by 1 minus 30%, which is 8.75%. And then that 8.75% I need to use cost of debt.
So if the question remains silent, you should assume pre-tax itself, right?
Yeah, if it is not given pre-tax and after tax, then you need to assume it is pre-tax. Cost of preferred stock. preferred stock dividend, okay, divide by net proceed, means whatever may be the charges we need to incur for issuing the preference stock, that we need to reduce. That you need to reduce. Okay, so preferred stock dividend divided by net proceed of preferred stock. Okay, so net, why we are using the net proceed? Because whatever may be the amount received against the issuance of preferred stock. Okay, then we need to reduce cost of issue of preferred stock. Okay, then preferred stock dividend. So whatever may be the dividend issued declared against the preferred stock, that we need to consider the preferred stock dividend, and we do not require to give a effect of tax. Okay, so the preferred stock dividend can be stated as a dollar amount or a percentage amount. Okay, if it is given $5, then you need to consider this. If it is 5%, then you need to consider this. Okay, $5 per share. Okay, 5% of the face value, not issued, not issued. So sometimes we are issuing the preference stock with a premium. Okay, so you shouldn't, I mean, whenever you are giving, it is given in the 5%, that you need to calculate on the face value of a face value or par value. One of the same thing. Net proceed of preferred stock, the net proceed from a preferred stock issuance can be calculated as the proceed net of the flotation cost or the issuance cost. Okay, so in this example, assume that the preferred stock component of a weighted average cost of capital of a firm is 10%, 10% against $100 par value. Okay, we are calculating on par value only. Okay, so $10 par value preferred stock was issued with a flotation cost of $5. Okay, so $10 is a dividend, and net proceed is basically the 100 minus 5, which is 95. Okay, so like cost of preference cost is preference share is 10 divided by 95, which is 10.53%. Okay, this way you need to calculate. 10 is the dividend divided by net proceed from the preferred stock issuance. Okay, and the 10% of the par value we need to consider. First, cost of return earning. Okay, first you should just keep in mind, almost means mostly the cost of return earning is always equal to cost of common stock equity. Okay, because this these are both this element is belongs to the common stockholder, means whatever may be the retained earning, that is also belongs to the common stockholder, and whatever may be the common stock value, that is also belongs to the common stockholder. Okay, so always the cost of retained earning and cost of common stock of equity is same. Okay, again this is non-tax deductible. So whatever may be the expectation of the investor on their investment, that you need to consider as it is for the weighted average, for the calculation of the weighted average cost of tax. So I mean the expectation of the common stock means a firm should earn at least as much as on any earning retained and reinvested on the business as a stockholder. Okay, so like whatever may be the investment did by the shareholder plus whatever the retained earning they have. Okay, so you need to give some return. Okay, so whatever may be the minimum expectation of the shareholder, that we need to consider as a cost of equity. Okay, so most common method of capturing the cost of retained earning, it is basically the capital asset pricing model, discounted cash flow, and bond yield plus risk premium. Okay, so we see one by one. Okay, so cost of equity equals to risk-free rate of return plus beta cost of market minus risk-free rate of return. Okay, so this component we can call as a market risk premium. This is basically mostly used. Okay, so you need to memorize this formula. Cost of equity equals to risk-free rate of return. What is risk-free rate of return? If I investment in a treasury bond, okay, so whatever may be the return I am getting it. Okay, say for it is 5%. Okay, plus beta. Beta means it measure basically the stock coefficient. Okay, measure basically the volatility in a current portfolio, or the individual have a portfolio. Okay, with respect to market. Okay, say for market return increase by 10%. When the market return increase by 10%, my individual portfolio increase by 12%. That means it is 1.2 is a beta. If market return increase by 10%, but my individual return increase by 8%, 8% only, 8%, that means it is 0.8. Okay, this is my beta. Okay, are you able to understand? Means in a market, if you see the return increase by 10%, okay, but in that situation, my individual portfolio return is increased by 12%. That means I am getting a more return than market. Okay, and that's why my beta is 1.2. And in case the market return is 10%, but my individual return is 8%. That means I'm getting a less return than market. So my beta is 0.8. So it is basically calculating the risk with respect to the market. Okay. Return on market. Okay. So again, or KM is also okay. Okay. So if the 5% is risk-free rate of return, I'll consider 1.2 as a beta. Market return is 10%. Okay, minus 5%. Again, because it is already given. Okay, so it is basically the 5% plus 10 minus 5 multiplied by 1.2 is equals to 6. So expected rate of return is 11%. Okay, so when the market moves or increase, market return is increased by 10%, I expect my return is increase up to 11%. Okay, so my cost of equity is 11%. This is
Sir,
CPA.
what is risk-free rate, sir?
Sorry, risk-free rate is basically if you are investing in a treasury bond or the government securities, okay. So in that situation, there is no risk because it is backed by the government and they are giving a lowest return, okay. Here I assume the 5% is my risk-free rate of return, okay. So that's why we need to consider. So whatever may be, this is basically the premium. It is total risk premium for individual security. If I remove the beta, then it is a risk premium for the market or market risk premium. If I apply the beta, then the risk premium which I'm expecting on my investment um, on my individual investment. Okay. And if I remove the beta, then it is a market risk premium.
Okay. So these are the assumptions which we are making, right, sir?
At this moment, yes, but these numbers are generally published. Like risk-free rate of return, it is given in a trade. Means there is a continuous issuance of the trading securities, so you can get it. Or like the RBI is giving the in India, if you see the RBI is giving the risk-free rate of return. The market return is also evaluated on the basis of Nifty or whatever may be the index fund. Okay, so that also publish. Okay, only non-published data is basically the beta, which you need to evaluate on the basis of past appraisal. Means whenever in last 6 months, what is the market return and what is the individual return, that you can evaluate. So beta you need to calculate, and then if you have a beta risk-free rate of return, cost of market and risk again risk-free rate of return, so you can calculate easily your expectation. Assume that the firm beta, we will see the example. Assume that the firm beta is 1.25. Okay, risk-free rate of return and the market return is or cost of market, anything. It is 14.25. Okay. Now we need to calculate. We need to start with risk-free rate of return. Okay. Plus beta multiplied by cost of market minus risk-free rate of return. Okay. Risk-free rate of return is basically 8.75 plus beta is 1.25 multiplied by 14.25 minus 8.75. Okay, so if you calculate this, then this way it is 15.63%. Okay, so 15.63 is my expected rate of return. So this way we can calculate. It is a simple formula: risk-free rate of return plus beta multiplied by market rate of return minus risk-free rate of return. This way you can calculate, and that you need to memorize this formula because you may get the 4 or 5 questions on this formula only. Then discounted cash flow method. Discounted cash flow given with something. So key assumptions: stocks are normally in the equilibrium relative to the risk and return. The estimated expected rate of return will yield estimated required rate of return, and the expected growth rate may be based on the projection past growth rate, a retention growth model, or analyst forecast. So here it is an assumption. Okay, just to keep in mind, cost of RE, and the same formula you can use for the equity as well. Okay, what I'm writing, that also you need to see. P0. P0 means the investment or the value as on start of the year. Okay. Start of the year. Okay. Then D1. D1 means dividend received during the year or expected dividend for the year. Okay. N plus G. Growth rate perpetual. It is perpetual growth rate. Okay. Now just we can, before going to the example, okay, price of the equity before start of the year is 20. Last dividend paid ₹2, and the growth rate is 10%. Okay. Now we need to see how we put the form in this formula. Okay. Growth rate is 10%. It is clearly given. Okay. P0 is given the 20. Now what is my D1? Dividend paid is 2%. ₹2, $2. Any guess? Once, can I put $2? Yes or no, or maybe?
So,
Yeah. So it is basically the last dividend paid. So that means it is not the expected dividend for the year. What is my expected dividend? 2 plus 10% growth rate means
10%.
2.2.
2.2.
Yeah. So 2.2 divided by 20 plus 10%, that is my expected dividend rate. Okay. So this way you need to calculate. So even if you see here, like assume that the firm is a constant growth firm that just paid an annual cost of dividend of $2, and the dividend growth rate is 7.5%. Okay, so the market price of the cost of dividend stock is 12.5. So you need to consider D1, then D1 plus P0. So $2 multiplied by 7.5%, which is 2.15. So 2.15 divided by 25.25 plus 7.5%. So it is 16.1% is my cost of retained earning. Clear? So D1 plus P0 plus growth rate. Okay. Whenever you will get in your question, you have a beta, then you need to evaluate whether I need to apply the CAPM model. In every question, you need to calculate the cost of equity or the cost of retained earning. Okay. But which formula you need to use? So that is basically the capital asset pricing model. This is basically the dividend growth model. So here D1 plus P0 plus growth rate. So if the growth rate is given, that means you need to apply the dividend growth model. If the beta is given, then you need to apply the capital asset pricing model. Then bond yield plus risk premium. So equity and debt security values are comparable before taxes. Risk are associated with both the individual firm and the state of the economy. So risk premium depend on non-diversifiable risk. So risk estimation can be derived by using a market analysis survey approach or subtracting the yield on an average A-rated corporate long-term bond from an estimate of the return on equity market. Okay. So bond rate always aware. Okay. Then the risk premium which you need to utilize, that depend on the credit rating of the security. So it is basically the pre-tax cost of long-term debt, because here we need to take a pre-tax because we are calculating the cost of retained earning, and the cost of retained earning is non-taxable. So that's why whatever may be the bond rate plus market risk premium. Market risk premium means risk-free rate of return. Market rate of return minus risk-free rate of return. So assume that the firm has a estimated market risk premium at 4.5% and has determined that yield to maturity on its bond is 11.34. So you need to simply add 11.34 plus 4.5. In question, instead of market risk premium, if they gave the market rate of return plus risk-free rate of return, then you can calculate the market risk premium. You can calculate market rate of return minus risk-free rate of return. Okay, that is basically the formula of market risk premium. Okay, and then whatever may be the pre-tax cost of debt that you need to add to calculate the bond yield plus the risk premium. So each method is a valid method of calculating the cost of retained earning. The average of three cost amount could also be used as an estimate of the cost of retained earning if there is a sufficient consistency in the result of the three method. Means either you can use the average because it is anyhow the expected rate of return. Okay. So I mean it depend the individual intention. Okay, they can either calculate or they can consider as a highest of this three, or they can take an average. Okay, so it is basically the like how you are going to calculate the cost of retained earning. Okay, and the same principle you need to apply for the cost of equity. Okay, any doubt here? Okay. So,
From perspective, how will the questions be, sir? It will be very huge questions or just the part by part?
No. Anyhow, we will take the some questions when we complete this chapter. But you will get a 2 or 3 line question. It is not the descriptive question you will get it. Either they ask to calculate the cost of equity as per the CAPM model or DCF model or BYRP model, but they never give which model they expect. Okay, I mean they may ask, they may give, but 95% cases they are not giving which model you need to use. You need to keep in mind the component. Okay, as I said, if they gave the beta, that means you need to utilize the CAPM model. If they gave the growth rate, that means you need to use the DCF model. And if they gave the bond pre-tax bond tax cost of bond, then you need to use the BYRP model like this.
Which method is most effective method out of three?
Out of three, most is
Which
basically
method
the
is
CAPM and DCF.
both are?
Huh. Okay, and DCF also called as a dividend growth model. That also keep in mind. They may give the dividend growth model.
Is it applicable to particular industry or it is common for all?
No, no. See, one thing, it is not related to the industry, it is related to the individual expectation. Okay. Most of the common man is not aware how they need to expect a return on their investment. Okay. But we as a financial consultant can guide by calculating this, by
Got it.
utilizing this model. So
Got it.
it is not the industry specific, it is the individual specific.
Oh, thank you.
Okay. So here we will take a break of 15 minutes and we gather around 8:45 then. Okay?
Okay, sir.
Yeah. So uh, yeah, am I audible?
Yes, sir.
Yeah.
Yes, sir.
Just hold for 1 minute actually. Yeah, actually, I just want to start a discussion about evaluation process. Am I audible properly?
Yes, sir.
Yes, sir.
Okay. So this link I will send it to you, and plus to Word document where the detailed process is given, means how you are going to finish the evaluation process. Okay. How many of you completed the graduation, or anyone who is not even completed the PCOM, or everyone completed the PCOM? I assume everyone completed the PCOM.
Yes, sir.
Yeah. Okay. So all of you are eligible to appear for a CPA exam. Okay. You need to select the Montana board. Okay. So this is basically the link which I am going to share on a WhatsApp after completion of this class, and plus two Word document. Okay. So it is basically the simple process. Okay. You need to pay the $250 for completion of the evaluation. Okay. And then, I mean, so it is not the only this page. Once you pay the $250, then you need to complete one more form. Okay. So once the evaluation is done, okay, or the for evaluation, actually, you need to submit a transcript as well. Okay, which you need to get it from the university. Okay, so that you can apply on your own, on, or there are certain agencies who can support to get the transcript. To for getting a transcript, it may take 1.5 months. Okay, and once you get the transcript, you need to apply. After that, you need to apply for the evaluation. Okay, if while getting a transcript you need to submit the NIES number, then you need to first register for the NIES. Otherwise, and then you can submit the NIES number to the university. Okay. Second issue, you need to, whatever the transcript you are getting it, don't open the envelope, because you need to send it to NASBA in a sealed envelope. Okay. So if you want to see what document university send it to you, so it is better to get the two copies, so that one envelope you can open and you can check whatever the documents university submitted to you. Okay. Also, it is required to attach the degree certificate, means individual mark sheet plus degree certificate. Okay. And board, you need to select the Montana, that you keep in mind. Okay. So after completion of the evaluation process, after completion of the evaluation process, then you need to apply for NTS. It is basically notice to schedule. Okay. So this is only the time consuming task. It takes 3 to 3.5 months. Okay. NTS may get 8 days. Even sometime it is, you will get it in 2 days time. Okay. Here you need to pay $390 approximately per paper. Okay. In between, there is a one registration. You need to do it on a CPA portal, that I will explain like in some other class. Okay. Where you need to pay the $140. Okay. And once you register for on a CPA portal, this transcript get attached to the CPA portal, and once you pay the $140. Okay. And after that, you need to pay $390 for notice to schedule. So it takes 8 days time to get the notice to schedule. Once you get the notice to schedule, then you need to pay the international testing fees. International testing fees, okay, which is approximately $250 to $280. Per paper. $280. Okay. Second issue, whenever you fill the form, keep in mind you are filling a form as a US for a US body, so you are always considered as a foreigner, because for US you are a foreigner. So whenever they ask whether you are qualified from a foreign institute, you need to say yes. That precaution you need to take it, okay, because you are submitting the form for a US body. So if you pursue your education or you took the qualification in India, that means for them you are a foreign qualified. That also you need to keep in mind. Once you pay the international testing fees, then you need to approach to Prometric. Okay, here you do not require to pay any fees. Okay, and this is basically finally you are scheduling your exam. Your exam. Okay, so at this moment I'm sending a document for NIES. Okay, how you need to fill the form. Okay, and if there is, if anyone has, like I hope everyone has a passport, because passport is mandatory. Okay, so if there is any difference in difference in name appear on a mark sheet or and the passport, then you need to submit one notarized document. So draft for that notarized document also I'm going to send on a WhatsApp. Okay, so this is basically the entire process for appear for the examination. Anyone has any
Can we choose? Can we choose if we have two different names in the passport and the degree documents? So can we choose what name can be appearing on our CPA exam papers and all, or it is whatever in the documentation?
no. You need to submit only notarized document, like name correction for on a notarized. I mean, you just need to give a confirmation or undertaking that name appear in a mark sheet, and the name appear on a passport belongs to one person only. So it is a
Okay,
notarized
so the
document.
gadgets will work, right?
Sorry.
The gadgets that we issue, if it works, right?
Yeah, it also works. See what happened. They will issue all the certificate and document as per the name given on the passport.
Oh,
Okay, so if the
got it.
passport name is correct, then no problem. But if there is a any issue in a passport name, so you need to first correct your passport.
Oh,
So basically, in Indian passport, if we have only initial and no surname, they expand the initial, put
Uh,
father's name first. So that's not a problem,
no,
right?
not a issue. Absolutely no issue.
So
In
would you be sharing these steps in a file or
I'll
something like?
yeah, I'll share all the steps. No problem.
Obviously.
Yeah. And particularly the student or I means any one of you from a Bombay University, so they need to apply online everything. Okay, they need to get the first transcript from the college, and after that, that transcript they need to upload on a Mumbai University website. Okay, and then and it is directly, I mean, the Mumbai University directly send a document to the NASBA. So they supposed to first do the NIES registration. But for Bangalore University, means I guess like you need to approach to the university, and they will submit. They will deliver by courier or by post the transcript document.
Okay.
Okay.
So before applying to transcript, I need to apply for this NIS.
NIS number. I mean, so first you
Oh.
need to get the transcript from the college, because college is not going to send directly to the NASBA. That transcript you need to upload on a Mumbai University website. I can share the website detail as well. Okay. So, but while applying to the Mumbai University, before that you need to register for a NIS.
NIS. Got it.
So
Sir,
if
is
it is
there any last date of registration or something?
No, there is no last date. And see, in every month there are almost 8 to 10 slot. Okay, so it is not like this. What is the last date or what is the closing date? You can apply anytime and you can appear for examination in any month.
So can we do one paper at a time?
You need to do one paper at a time only. I never encourage that you should get the notice to schedule for all paper in one go. That's why I'm written per paper.
Oh, okay.
so is it
For every
approximate cost per paper?
Sorry,
What is the approximate cost per paper?
it is
For
basically
evaluation?
you can consider the 140 is one time, then $390 for NTS and $250 to $280 for international testing, which is per paper. This is also the per paper. Okay, so almost you can consider the $650, $650 or $700 roughly. Okay, so I mean, before appearing for an examination, like you need to keep in mind whenever you are giving a mock test from the Becker for full course, make sure you are able to solve 55% correct. Then and only then you can get the 75% in a exam. So if you are scoring less than 55% in a mock, don't schedule for an examination. And this entire step you can finish in 10 to 15 days. So just like evaluation process, you need to complete because it takes 3.5 months to 4 months. Okay, and it is once you complete it, there is no time limit. Okay, so that's why only do hurry for this. And whenever you want to appear for an examination, okay, and when you feel okay now you are through with all your studies, then you can start for a NTS. NTS is valid for 6 months. Okay, and entire process you can finish means NTS, international testing, prometric in 10 to 15 days. So I mean 10 days before also you can start the process for the NTS. But keep in
So again,
cost of examination is very high. It is almost 56,000 to 60,000. So I mean you first prepare thoroughly. Yeah, Pooja, you want to ask something?
yes, sir. I studied in autonomous college, but it is affiliated to Bangalore University.
That is
I am getting a transcript from my college directly. So again, do I have to go upload for Bangalore University or
Bangalore.
something?
Yeah, you need to get it from Bangalore University as well.
Okay. Okay. Because yeah, I did go apply in my college. They are giving me transcript, but again I have to go apply to the Bangalore
Bangalore
University.
University. Yeah.
So, like CMA, do we also need credit card for this for
Yeah,
payment?
correct. Payment, you need to have a credit card. Yes.
We can't use debit card or any other.
Actually, I have not tried the debit card. You can try. Okay. And like maybe debit card cannot be used, but means Visa debit card maybe it is workable. Let me check. Means I'll get back to on this issue. And this $140, I mean, that $140 you need to pay only after you have an evaluation report. That also you need to keep in mind, because the time limit for this $140 is 30 days. And as I said, evaluation required a 3 month time. Okay. So if you have an evaluation report, then only you can start to process your means on CPA portal. So you need to follow the step thoroughly. Otherwise, there may be you need to pay the twice or thrice fees.
So what if we are thinking of scheduling 2 exams at a time?
I mean,
Then,
what is
like bar and bar, if we are thinking of giving 2 papers in a single time scheduling, so
why you want to give 2 paper at a time? It is
no, like in a month only. So
Yeah, see, you can give it, but it is a risky means because you need to prepare for a 2 paper simultaneously. So it is better that because as I said, from NTS to Prometric, it takes 15 days only, 10 to 15 days. So it is better you need to first complete 1 paper, and maybe after that you can start to schedule for a next paper and then appear for an examination. See, one good point for the CPA is basically you need to appear for a 1 paper at a time. Okay, and I tell you something. The how I can say, uh, the more or less the toughness of the CPA is 70% of the Indian CA. 70 to 80%. So it is not so easy. That also you need to consider. So my suggestion is because my suggestion is go by one only, 1 paper at a time.
In which subject do you think we should opt out first to give that paper?
Okay, so that is, I mean, so you can start with the par, but I mean, my observation is basically it. I mean, the sequence of the paper will not much help actually. You can give any paper at a time. The FAR is basically it is a regular accounting and the practical subject, so this is okay, and the time consuming, and the like for first paper because you need to go through the evaluation process, so it takes time. So first you need to go with a FAR, okay, and after that maybe the second one maybe the bar and then reg and then audit, like this you can go, but sequence you can change, that will not give much benefit.
So this NIES, you have to do one-time registration for all the 4 papers,
Yes, it
or
is.
every paper we have
No,
to
no,
do
no,
when
no, no, no,
NIES.
no, no. See, NIS is basically the evaluation of your mapping of your Indian qualification with the foreign credit. So it is a one-time exercise, not for all paper. Once you get the evaluation report, let me check.
So for evaluation, they take 3.5 months, sir.
Evaluation it takes 3.5 months. So this is basically maybe you are able to see on my screen. This is my evaluation report. So this way basically means whatever the qualification I have, okay, it get mapped. Like I did BCom, so I got the 90 credit here. Then it is my CA, so I got 90. So 90, 90, 180 credit, and this is my total credits, 180 credit. So this is basically whatever the individual mark sheet I have in the BCom and the CA, that get mapped with their qualification, and accordingly they award me a credit. So it is a one time for all 4 paper.
So how we prepare for NIS?
How you prepare for?
NIS.
Which subject again, Roshan?
Sir, any subject you tell me ki NIS is a one-time exam. So I have
NIES.
to.
No. FAR I am saying. Audit. Okay. So see, once you thorough with the concept, you can directly jump with the MCQs and make sure that you are also giving a equal importance to the simulation. My observation is most of the student like ignore this aspect. Okay, and because of that reason also sometimes they are not able to crack the exam. First thing you need to keep in mind, as I just told you, that the toughness of the US CPA is almost 70 to 80% as compared to the India CA. So you can imagine. Okay, so you need to thorough with the concept. You need to do a continuous practice of the MCQs, and you need to give a due importance to the simulation. Okay, so if I ask me, so at least 2 times you need to solve all the MCQs and simulation. Okay, in Becker question bank, almost I think 1,500 to 1,800 MCQs are given, and the 75 simulations they gave for each subject. Okay, so that you are able to revise at least 2 times. And before examination, you need to create your own mock on Becker. Okay, so you need to make sure that when you started to solve a 55% correct, then you can start to think apply for a NTS and like other process. Okay, and in that 15 days, you would be in a position to do the entire revision. Last 7 days you need to, I mean, this is all other how I can say the general guidance. Actually, you should disassociate from all the activities. Even maybe if you can take a leave from the job, then that will be better, at least for 3 days. Okay, and make sure that on a single day you are able to solve 300 questions, MCQs, either 300 MCQs or 150 MCQs or 20 simulation. If you have that speed, that means you are fairly prepared yourself.
Don't I have negative marking, sir?
There is no negative marking, but it is not necessary that each right question you will get the equal credit. When sometimes if the question is tough, then you will get the 3 credit, and if the question is easy, then you will get the 0.5 credit. So 100 out of 75 you need to secure by solving more tough question. Solving correct more.
So, what's the total duration of the exam? Like, what will be the time limit?
4 hours, and out of that you can take a 15-minute break.
Whenever
I
we want,
think-
sir, or is that given?
Tanisha, you can continue with your question.
Sir, whenever we can take, or is it when they give it? Like, is there a
No,
specific
it is
time?
not like this. Okay, so it is basically you will get the 5 set. First 2 set is MCQs, and the remaining 3 set is simulation. Okay, you can take an optional break, but timer is run. But when you take a break after third part solve, here you will get the 15-minute break where timer is off.
Sir, is there a sectional cutoff for each section?
No,
Each test like?
no, means you can take a entire 4 hour for each section. It is up to you. But then
No, sir, marks wise.
my observation is each section carries a equal time. So accordingly, you need to evaluate.
How the marks are segregated, sir?
It is all, there is no separate segregation, but it is expected means each carries the equal weightage, like 20%, 20%, 20%. We are not basically aware of means how means what question they consider as a tough, what question they consider as a easy, where they gave a credit of 2 point, where they gave a credit of 0.5, that we are not aware.
Sir, after the evaluation, how many months or years do we get to complete CPA?
No, it is not. Means after evaluation, you can do at any time. Okay, but once you finish the first paper, okay, within 18 months you need to complete next 3 paper. Means the rule is like this. I tell you. All four paper, all 4 paper, you need to finish in 18 month time. 18 months. Okay, so if the 4th paper you are going to complete on 20th month, okay, then the chain started from this. Then you need to reappear for first paper, so that we need to complete all 4 paper in 18 month time. So 18 months started from the result of first paper.
So certain states are giving more time to complete, right, sir?
Yeah, 36 month also you will get. Okay, but mostly means most of the state are giving the 18 month time.
So Montana is giving only 18 months.
To the best of my knowledge, because Montana, I'm generally preferring there because they are okay with the like BCom only. Okay, but some of the means most preferable states are basically the for Indians is Alaska, then Guam and Montana. Okay, when these 2-3 states are giving a 18 month time, and the some of the states they are giving a 36 month as well.
So 18 months from the result of first
paper. It is started from the result of first paper.
And that's a 6 month validity you told, right?
No. It is not like this. The NTS, notice to schedule, has a 6 month validity. Means when you apply for a notice to schedule, means I want to appear for an examination, then within 6 months you need to appear for that paper. That's why I'm saying always take a NTS for a 1 paper at a time. Because there is no fees discount if you take an NTS in one go for all 4 paper. If you take an NTS for all 4 paper, then you need to complete all 4 paper in a 6 month only.
So if we select only one paper, then too we will be having $140 for NTS.
No, 140 is a one time. After
One
that,
time.
yeah. So that is basically the registration fees of a evaluation report.
Okay.
Okay, so for every paper we have to register for NTS.
For every paper you need to register for NTS. NTS, then international testing, and then prometric. That is for like all paper you need to repeat the state.
Sir, what if we are not able to clear all 4 in 18 months?
What is?
What if we are not able to clear all 4 papers in 18 months?
No, see, I tell you something. Mostly, if you are serious, then you are easily clear all the paper in 18 months. See, what happened, like generally it requires 3 month to 4 month time. Okay, first paper already you finish it. After that, you need to finish the 3 paper, which is 6 months for each paper is more than sufficient. So I don't think this will be the issue.
Okay, sir.
After that, you maybe each and every paper you can finish in 3 to 4 month time.
So how long it will get to know the result of each paper? How long they take?
Okay, so I have a schedule of exam, I mean, month-wise exam and the corresponding result that I will send it to you tomorrow by tomorrow evening, so that you can understand. Means if you give an example in exam in the month of August, then maybe by 21st of September you will get the result like this. Within 3 weeks time, you will get the result.
The exam is system based, right, sir?
Yeah, it is system, but you're not getting an immediate result. They will publish on a NASBA site, means when you register for a CPA portal, where you need to pay the $140, you will get the credit on that portal.
So once after getting the result, then we can apply for NTS for the second paper.
No, it is not required. You do not require to wait for the result. Like as someone says, if you are able to do the parallel study for the two subjects, okay. So like the for second subject, you may need another next 15-20 days, okay. So you do not require to wait for the result. You can register for a second paper and then you can.
What are the chances of getting through the CPA like exam in one attempt?
I mean, as I said, if you are able to get a 55% in a mock test, okay, so then you are definitely able to crack the exam. And if you're not able to get the 55%, it is better not to schedule for an exam. So if you appear for an exam, then you should clear it. Keep in mind, exam fees is very high.
Yeah. So this NIES, we will require only the transcript, right? Nothing else.
NIS transcript as well as the copy of the passport.
Copy of the passport. Only these two will.
This two document. I will send a one word file which describe the NIS process.
Okay. Okay.
So instead of sending each SEM marks card, can we send the one consolidated marks card which the university only sends?
See, whatever I mean, how they are giving a credit, they are evaluating individual subject. Whether the different mark sheet or consolidate mark sheet, it is immaterial. But all the subjects get listed out. Means if you appear in a BCom first year 6 subject, then it is separately listed out. BCom second year 6 subject, then it's separately list out. If it is a semester pattern, then for you are appearing for each paper in each semester, that get listed out over there, so that they can map or assign a credit.
So they need semester wise result.
Yes. And it depends on how the university is giving you the transcript. That is also the important. But every university is aware at this moment, means what the US body or the NASBA is required. So I think they are giving in that fashion only.
So transcript consists of transfer certificate and marks card both.
Only mark sheet, not transfer certificate.
So mark sheet, if I was taken from the Christ University, Autonomous University, that won't be applicable.
If they are affiliated with any state university or the district university, then you need to take it from that state university or district university.
They are autonomous, sir. Christ University.
So then you do not require to take it from the state university. You can submit the directly, but it should be in a sealed envelope.
Yeah.
And along with the means who is giving a degree actually, Christ University or
No, sir, the degree is properly given by the Christ itself. It's an
Christ.
autonomous
Okay,
university.
okay. So then it is sufficient. You need to submit the degree certificate as well. That also you need to keep in mind. Because some of, I mean, I observed that some students send the mark sheet only and they forget to submit the degree certificate. Then they are getting a mail. And make sure that 2 times you need to revise the MCQs and simulation.
So they have centers in Mumbai
Yeah,
for exam.
Mumbai. I mean, in Maharashtra only Mumbai has a center. So there are 7-8 center. Bangalore also have a center.
Sir, overall passing percentage is 75% for CPA, right?
Correct. Right.
So if we score overall 75%, but in one test slate we get less marks, but in other we get more, so there's no issue.
No. Means it is not the overall. Each paper you need to score 75%. There is no
Each
compo
test
for
slate.
something. Yeah, each paper. There is no compo for anything, and you need to clear one paper at a time. That's why I'm saying don't prepare for a 2 paper simultaneously. Give one paper and then appear for and start a preparation for the second paper.
No, sir. For like in FAR, you said that there are 5 test slates, MCQs and task-based
Okay.
simulations.
No. This combine means okay. Understood. If you are asking, means this section in consolidate you need to have a 75, not on individual. Like in US CMA, there are two means MCQs and the essay questions. If you are not able to score in 80% in MCQs, you don't require to attempt. I mean, they will not give the opportunity to attempt essay question. So that is not the case here. You can attempt everything and consolidate. Means here maybe the 0, but in this 4, if you are able to achieve the 80%, means the 100%, then again you are pass.
So for this 5, how long we have to invest for each particular, like TQs, we have to give 1 hour time. Remaining all the 3 parts, 3 hours. It's like that.
Yeah, see, as I said, means you can consider the 3.5 hour. Okay, so it is 180 plus 30, so it is 210 minutes you have, and then accordingly you need to divide in a 5. So 40 minutes approximately you need to consider for each section. 40 to 45 minutes. Okay, my observation is time is not an issue here because I am able to finish in 2.5 hours. Okay, but okay, I'm not going to compare with me. But what I observed means I don't get anyone complaint till now that I am not able to complete within a time. Okay, the problem is you need to be clear with the concept because even though you successfully completed the 2000 MCQs in from the Baker, still you will find you will get the question which is not you have not seen in the Baker material. That I mean 5-10% you will get like this. So you need
Sir,
to
but
be,
we have
you need
sir,
to be
we have Bakers 2014, sorry, 24.
Yeah.
So it have some updates. So what do we do?
So that Baker keeps on updating their LMS. So you do not require to do anything additional. They keeps on updating the LMS. Okay, one more point. Almost 15 to 16% means 75% maybe you are considering as a tough, but 15 to 16% questions you will get out of the syllabus. Okay, and for that, even if it is wrong, you will get the full credit. Only requirement is you need to attempt. What the AICPA is doing, they test 15 to 16% questions out of syllabus, okay, so that they want to understand the level of the student, okay, and you will get the full credit. So it is not very much difficult to secure 75%. That's what I'm saying. Like in mock test, if you are able to secure the 55%, you will get 75% in final exam. And for time management, time again, because for continuously solving MCQs and simulation for 4 hour is also not an easy task. So in last 3 days of the exam, you have a capacity to solve either 300 simulation MCQs in a single day, or 150 MCQs on 10 simulation in a single day. If you have that capacity, then you can easily appear for an examination.
So each testlet contains how many questions?
Okay, that is not defined actually. Means like the 6 module, they are carrying around 20, means 15 to 16% each module, but the topic wise you cannot say.
They give options, or we just have to attempt whatever they have. Like if five of tests.
Everything is compulsory. There is no optional.
Okay. So if they ask 20, we need to solve 20.
Yes, I mean all MCQs you need to solve. It is not like this. Out of 100, you need to solve the 75. They gave the 77, 68 like this, and you need to solve. They gave 8 simulation that also you need to solve. Everything is compulsory.
So now, as per ISME booklets, we have end semester of ISME as well. So
Yes.
that end semester won't affect our CPA examination if the dates are matching.
That you need to plan actually accordingly. I mean, see what happened. What I suggest, I mean, like you need to take a 6 month time for each paper. So it is easily you can manage. I means when the other semester is conflicting with the US CPA schedule, that you can manage. Any
So,
other?
sir, as per you, when is the right time to start registration for the process of CPA?
See, evaluation, you need to get it done as early as possible, because this is the only time consuming activity and one time activity. Even though you are not started to prepare the CPA, still I suggest you need to start evaluation process. Okay. So once this is done, then all the registration, exam registration is 10 days, 15 days activity that is in our hand. So again, I am telling you, even if you have not started for a study, still I suggest you need to complete the evaluation process.
So how the ISME exams will be conducted?
That is also online. Any other topic?
Sir, I have one doubt.
Yeah.
Sir, I get my transcript for the graduation, and recently I completed my post graduation also. So I have to apply for the transcript for the separate post graduation also.
No, I suggest like you need to apply for both the you need to consider both your post graduation and the graduation, because if you get a higher credit, then it will be good actually, and in one go you can finish the evaluation. Otherwise, what happened? You need to finish the evaluation for examination separately, and you need to again go with the evaluation process for license. So it is better you need to get first post-graduation transcript and then apply for the evaluation.
Excuse me, sir.
Sorry.
Sir, when I asked the university, it is an autonomous university in Bangalore. They told that they will be accepting only provisional certificate as well as original transcript to be sealed and signed.
That is
Is that
okay.
acceptable?
Yeah, it is acceptable.
Okay, sir. Thank you.
Sir, I have a question.
Yeah.
If we have done a professional course, do we need to like add that certificate as well during the evaluation?
Which professional course?
US CMA.
US CMA, you will not get the credit. So it makes no sense.
Okay.
If you do the India CMA, India CA, then you will get the credit.
Sir, I have received the consolidated mark sheet. In that consolidated, there are bifurcations of all the semester-wise credits and the marks.
Okay, so that is acceptable, but means you need to get the transcript from the university.
Yeah, the Christ University.
Yeah, Christ.
Earlier when I asked.
Yeah, okay, and it should be in a sealed envelope. It means you should not open it.
Okay, sir. So we need to submit the original. You mean?
See, original transcript already given in the sealed envelope. I mean, transcript is basically attestation by the university or the authorized person from the university on your Xerox mark sheet. That is transcript.
Sir, I'm currently pursuing my postgraduate. So should I complete the evaluation process after post graduation? Because I just started my second year.
You are in second year, and when you are going to finish it by this year end.
2026 January to April.
Okay, so it's up to you basically. It means if you want to appear for an examination now, then you need to complete the evaluation process in 2 phases. Okay, and if you are okay to appear for an examination from May onward, May or June onward, then it is better to wait for a post graduation mark sheet, and then you can appear for go for a evaluation process.
So, but I researched about it that we need 150 credit hours.
That is for license, not for appear for an examination. So if you are BCom, just an example, you are just a 3-year BCom, then you can, you are, whatever may be the requirement from particularly Montana board and the Guam board, you fulfill that requirement. Okay, because they don't have any criteria for 120 or 150 credit. Okay, and you can appear for an examination on the basis of whatever the credit you have on the basis of your BCom. Okay. Once you finish all your paper and your post graduation, then you need to reapply for re-evaluation for license. Okay. So that you need to finish in 2 phases.
So we have how many days of time after we get our license and we need to apply for the re-evaluation of license?
No, no. Once you finish like all 4 paper, you need to complete entire process after within a 36 month.
Okay.
Okay, so you have a sufficient time.
Excuse me, sir. So, should we send the transcripts through physical post to NASBA or through email?
No, no. You need see if you want to send a document through email, then you need to it is routed through university directly. And if you want to means you need to collect the transcript in a sealed envelope from university, then you need to send it by post or courier.
Thank you, sir.
Yeah. So keep in mind when you are sending the transcript, then it should be in a sealed envelope. So whatever the envelope you are getting from university, you need to send as it is. You should not open it and then like repack it. That should not be the case. Any other questions?
So is there any fixed passing percentage required to apply for the CPA in
In in
graduation or
no,
post graduation?
not at all, not at all. Because see what happened, they're giving credit on the basis of only pass, not on the basis of percentage. You appear for a particular paper, you will get the full credit like this.
Okay.
But that doesn't mean if you are fail in BCom, okay, and then you can apply for a transcript because you need to submit degree certificate as well.
The provisional degree certificate is applicable.
Yeah, that is okay.
Like,
Yeah,
okay.
that is acceptable. Because anyhow, this is issued by the university. So and they are attesting it. So that's why, because we are sending a transcript, so that is acceptable.
Okay. And after evaluation, we will start the NIES process.
After evaluation?
After getting transcript from the university, we will apply for the NIES.
Evaluation to the NIES, yes. Anyone has gathered transcript document from Bangalore University till now? Okay.
No, sir, only from my college I've gotten because it's autonomous. But just now I got to know that I have to go collect it from university as well.
Yeah. But means you collect, Pooja, you collected from the college, but you have not registered with the NIES, right?
Yeah, I've not registered. I just collected one copy to see how it looks like.
Okay.
So I thought I'll apply one more and then send it. But yeah, I didn't know the process completely. I didn't know after collecting from my college, I have to go and get it from university also.
Okay, okay, understood.
Like same like Christ, even my college was autonomous, so I thought only that was enough. I had asked one of my friend who had appeared before.
Okay, but who issued that degree actually? I mean, Bangalore University or your college university?
The provisional certificate came from the Bangalore University.
Okay, and Hardik, in your case, who issued the degree?
Degree certificate as well as all the marks that I got in my autonomous college itself, sir.
So, Christ, okay, okay. So the case is
Christ.
slightly different here.
So I have to get the transcript from my autonomous college itself, right?
Yes.
Christ.
Yes. I mean, if the degree issued by the university, then you need to collect the transcript from the university.
Okay, sir. Yeah, Christ is deemed to be university, as is autonomous affiliated to Bangalore University.
University, yeah. So that is a difference. Okay, understood. Okay. Any other doubt anyone has?
Sir, how are we supposed to send that sealed envelope to the NIES? Is it routed through university or
No. If
something?
university is directly sending, then okay. But in that situation, you need to first register NIS and make sure that university mentioning your NIS registration number. Mostly, if they are sending by email, then they are directly sending university. Otherwise, they are not sending to the foreign institute. They will deliver it to you in a sealed envelope, and the same envelope along with the passport copy. Okay, don't send the original passport. Okay, passport copy. You need to keep it in a separate envelope, and then you can send it.
Okay,
So
sir.
when you
Thank you.
register for an NIS, they will give the answer. They will give the address detail where you need to send all this document.
Okay, sir.
Anything else? Okay, so we have a 7-8 minutes. So just I'll give the idea about the optimal capital structure. Okay, so optimal capital structure is basically where you will get the lowest weighted average cost of capital. Okay, so like equity plus RE 20% and the debt after tax maybe 10%. Okay, if I consider the ratio 50-50, okay, then the average is maybe the 15%. Okay, cost of capital. But if this ratio change to 75% and the 25%, okay, so in that situation, this cost of weighted average cost of capital increase from 15% to 17.5% approx. Okay, so I mean, which ratio you will find better here? Like this is one set 75-25, and this is the second state 50-50. Any guess? If we have a capital structure of 50 to 15, 50 to 50 is to 50, then the weighted average cost of capital is 15%. But if we have 75% equity and 25% debt, then weighted average cost of capital is 17.5%. Okay. So which would be the optimal capital structure?
15%.
15%. Okay. If I consider the 0% equity and 100% debt, so what is my cost of capital? 10%. Okay. So why we cannot take the 100% debt?
It would be too risky.
It will be too risky, and debt holder never give a 100% debt. Otherwise, they
In return, they demand guarantees.
yeah, correct. They will expect a whatever the rate of return expected by the equity holder. Entire profit they are going to demand. So it is not possible. Okay. Generally, in practice, it is basically the ratio generally once the debt ratio 2 and the equity is basically the 1. That means 66.66%, 33.33%. Okay. So whenever loss arises, it may get knocked off against the equity and the debt may be secured. This is basically the general philosophy. Okay. So like if you see here, like if this if you see this chart, so lowest debt equity ratio. So cost of debt is always 6%, and the cost of equity is from 10% it get increase, and the weighted average cost of capital. So it is basically at 4% it is the lowest one, and then it started to increase. Why it started to increase? Because after that the equity holders expectation started to increase, and further debt holder also their expectation also started to increase. Okay, so 4 is basically means the debt when the debt equity ratio is 4, at that time weighted average cost of capital is lowest one. Okay, so as I said, if you take 100% debt, then they started to expect a more equity, more return, because in that situation their investment is more risky. They may expect 20%, means whatever may be the expectation of the equity holder. Okay, so this way we need to find out what would be the best optimal capital structure. Any doubt here? If the debt portion is more, then they started to expect a more return in your total capital structure. Okay, any doubt here?
Yes, sir.
Okay, so okay, application for to capital budgeting. So that portion we will start. We will take tomorrow morning. Okay. Any okay. Whatever the topics we covered. Any doubt?
Sir, in case of mortgage,
Yes.
in if at all any property has any litigation, then the bank provides the mortgage loan or they reject it, sir.
Generally, they reject it. If it is in litigation, then how we consider this as a mortgage debt or the secured debt? Means the subject matter, the security itself in a litigation. Okay, so generally bank is not going to give a loan on that property. They need a clean property as a collateral.
Okay, sir.
Okay. Any other questions? Okay, so if there is no question, then I will close the class for today.
So,
Okay, so bye then.
Bye, sir.
Bye.